1. Biotech Outlook for 2026 by Alison Gatlin. From page 1, continued on page 6 as weight loss drugs continue to drive biotech industry. The long winter for biotech stocks is over. Shares have climbed to levels not seen since late 2021, buoyed by eye-popping takeover valuations, trailblazing innovation in battling obesity and cancer, and a surprising, if uneasy, alliance with the Trump administration. The biotech comeback that experts have been predicting for months has finally arrived. As of February 3, the SPDR S&P Biotech ETF, XBI, was up 26% year-to-date, versus 4% for the S&P 500. The IBD Medical Biomed Biotech Industry Group plummeted more than 64% through April 2025. But in May, the group began a turnaround, surging more than 32% over the next 8 months to end the year with a nearly 34% gain. And investors are looking to 2026 with optimism. Optimism as the industry emerges from what's been generally portrayed as a frosty season for biotech stocks. Industry veteran John Maraganore, the founder of Alnylam Pharmaceuticals, ALNY, compared the slump to a dark winter, which he declared has finally ended. Brad Stewart, an executive with advisory firm BDX, called the last 4 years the biotech winter. You can never tell whether the temperature is changing in an interview. You just know it's happening. The change is happening despite lingering uncertainty, much of it tied to the Trump administration. The biggest has been Robert F. Kennedy Jr., his appointment as health secretary. Weight loss drugs continue to drive biotech industry. Continuation. In the ensuing months, U.S. health agencies saw an incredible level of turnover. That continued into early December. Meanwhile, back and forth on tariffs, talk of drug pricing reform and questions on where interest rates are headed took their toll on biotech stocks. But developments in Washington have made a more muted market than expected, setting the stage for biotech stocks to return to Wall Street's limelight. The 44th J.P. Morgan Healthcare Conference starting January 12 could offer further proof of biotech stocks' return. The annual conference is known for splashy deals, promising clinical data, and fourth-quarter earnings pre-announcements. The biotech spending interest in biotech is based on an important development. Multiple blockbuster drugs, including household names like Keytruda, Eliquis, and Farxiga, will lose patent protection over the next several years. Arda Ural, a life sciences leader with advisory firm EY, estimates some $500 billion in sales are at risk from the so-called patent cliff. To match those sales holes, big pharma companies are teeing up big biotech takeovers. Deals totaling $129 billion were announced in 2023 as of mid-December, Ural told IBD. In terms of dollars spent, that's up 43% year-over-year, despite a 29% drop in the number of deals. This means pharma companies are actively trying to lock down big for biotech companies with engaging clinical data that could pave the way for the next blockbuster drug, he says. The last year saw Pfizer, PFE, snag obesity-focused Metsera for $10 billion, following a gloves-off public fight with Novo Nordisk, NVO. Johnson & Johnson, J&J, scooped up neuroscience asset Inversible Therapeutics for $14.6 billion. Novartis NVS is putting up $12 billion on RNA-focused Avidity Biosciences, RNA. Merck, MRK is scrambling to fill its Keytruda size gap that starts in 2028. The company paid $10 billion for Verona Pharma and its COPD treatment Ontivare. It spent $9.2 billion to bring antiviral-focused Syma to the market earlier this year. And the big-name pharma bought SpringWorks Therapeutics for $3.4 billion. M&A spree will continue. Experts expect the breakneck pace of takeovers to continue, and Wall Street appears to support the M&A push. It's the way stock rallied this week on news that the pharma behemoth has agreed to acquire Ventyx Biosciences, VTY, in a $1.2 billion deal. There's absolutely demand, Ural said in an interview. And can they afford it? The answer is yes, because our latest estimate for their firepower is about $1.38 trillion, which is one of the all-time high numbers. So they have the means to acquire inorganic growth. Ben Fulwell, business development and licensing lead for Evaluate Pharma, says 80% of revenue at Merck, Bristol Myers Squibb, BMY, GSK, and J&J is at risk in the next 5 years if they don't buy or develop new drugs. AstraZeneca, AZN, Sanofi, SMI, Roche, RHHB, and Novartis are also feeling pressure with patent expirations affecting 30% to 50% of their sales over the same period. Last year, about $15 billion in revenue was lost due to patent expirations, said John Wu, a managing director with advisory firm Boston Consulting Group. He expects that number to triple by 2026. Looking at new hits from these drugs, we'll be looking for sources to replace that lost revenue, he told IBD. It's a headwind for large pharma because they have to find ways to replace that revenue. And then, if they're unsuccessful in the near term, they have to change their cost base to accommodate the loss of such a huge cash cow in their pipeline. And then, for biotechs, it's a good thing. China takes on US biotech. But that tailwind also highlights a vexing problem facing US biotech stocks. China. China has acceleration, and the US has speed, said Ural, of EY. In other words, China's goal of becoming a biotech leader could be gaining some legs. Of the $129 billion spent on 2025 biotech deals through mid-December, $61 billion was from China, he said. That's up massively from just $1 billion 5 years ago. At that time, China was in the early innings of the state-mandated goal of becoming a biotech powerhouse. Today, it is a juggernaut to be taken seriously. China is a formidable rival to US biotech, says Ural. He points to the lower cost of doing business in China as a key advantage. That's important for a small company such as BioNTech, where clinical trials can cost in the hundreds of millions of dollars. In 2024, China ran 39% of the clinical trials for cancer drugs, beating 32% in the US. That will carry forward to the overall number of clinical trials soon, Ural said. Licensing deals are also on the rise. Pfizer, for instance, Takeda and Lilly, all have licensing deals for obesity drugs from China. A number of companies, including Japan-based Takeda Pharmaceutical TAC, have also inked licensing pacts with Chinese biotech companies for cancer treatments. As a result, US biotech companies have to differentiate from their counterparts overseas. China has the manpower and the money to really kind of copy almost anything, said Martin Brenner, Chief Executive and Chief Scientific Officer of Cardiometabolic Focused Bio, BIO. It will put pressure on the biotech sector here in the US, but this is an industry that always lifts on pressure. Innovation bolsters stocks. Innovation is where US biotech really shines, says Simon George, Chief Executive of venture capital firm SR1. Without true patient impact, new medicines that are going to transform the standard of care, we have no right to expect the market to reward us, he said in an interview. And biotech stocks thrive on the industry's ability to innovate. Spruce Biosciences, SPRB, shares catapulted nearly 400% on October 6 after the Food and Drug Administration granted its experimental treatment for Sanfilippo syndrome type B a breakthrough designation. The designation will allow for a streamlined development process as well as up to a robust treatment care genetic disease. On November 18, biotech stock Klima Pharmaceuticals, QLMA, catapulted 137% after Roche unveiled promising results for a breast cancer treatment similar to one that Klima is working on. Roche's drug beat out the standard treatment. Capricorn Therapeutics, Capper, shot up more than 2.0% in a trading with a 37.1% gain on January 3 on positive results in Duchenne muscular dystrophy. Later, Wave Life Sciences, WVE, and Structure Therapeutics, SPGR, skyrocketed by triple digits on updates for their fat and weight loss drugs. The biotech industry continues to deliver unmatched innovation for patients, said Maragamore, the biotech veteran. The industry, frankly, is crushing it on the innovation side. Can obesity drugs do more? WaveLife's drug is an example of innovation in a space often called out for a Me Too approach. The drug, called WVE-004, opens up a whole new world. Wave's co-founder and CEO says in a report, it works by turning off the gene that produces the activin E protein, which plays a role in how the body uses fat and balances its energy needs. In December, Wave said patients who received its drug had a 9.2% reduction in visceral fat and a 4% reduction in total fat mass. Visceral fat is the fat that surrounds organs in the body and is more detrimental to metabolic conditions like type 2 diabetes and metabolic dysfunction-associated steatohepatitis, or MASH. MASH falls under the umbrella of fatty liver disease. Later, Arrowhead Pharmaceuticals, ARWR, said its own gene silencer, a rival to Wave's drug, led to a 25.2% reduction in visceral fat over 12 weeks. The company specifically studied its drug in combination with Eli Lilly's tirzepatide in patients with type 2 diabetes and obesity. Tirzepatide sells as the weight loss drug Zepbound and in diabetes treatment under the brand Mounjaro. The market for weight loss drugs is massive and growing, but a targeted fat loss can be more difficult than conversation entirely. 2026 could also be the year of weight loss pills. The FDA has already approved Novo Nordisk's oral Wegovy. Lilly's orforglipron could soon follow. Pills cost less to produce as they don't require an accompanying device, like an autoinjector, to deliver them. And when it comes to weight loss drugs, cost is key. In fact, drug prices have suddenly become a high-profile issue under the second Trump administration. The White House signed deals with Lilly and Novo, which agreed to sell their blockbuster obesity drugs Zepbound and Wegovy for $346 and $350 a month, respectively, on the new government-backed direct-to-consumer website, TrumpRx. Those prices are 65% to 74% lower than the drug's list prices. The pills will go for $150 to $346 a month. This is the beginning of a landmark change in how the market consumes weight loss drugs, says Christoph Dankert, an executive with healthcare network company Carum Health. We're going to see some changes, definitely an uptick in demand for sure, he told IBD. And with that, we could see a real change in how we treat cardiometabolic disease. Is all this going to happen in 2026? I don't know, but this could happen potentially faster than we think. The direct-to-consumer trend is definitely one to watch for investors in biotech stocks, says Stewart, the BDX executive. The government-backed TrumpRx is a facet of President Donald Trump's most favored nation executive order, an effort to align U.S. drug prices with lower international prices. In exchange for lowering their drug prices on TrumpRx, a handful of big-name pharma companies will avoid sky-high pharma-specific tariffs for a number of years. Market for obesity drugs. Lowering drug prices may seem like a bad thing for these pharma companies, but in reality, it could massively expand their markets. Insurance companies still might balk at paying for weight loss drugs, but consumers could be more willing to pay for them themselves. Meanwhile, the Centers for Medicare and Medicaid Services will, for the first time, foot the bill for obesity drugs for some patients. I think this year we're going to see a pretty significant battle as more direct-to-consumer options become available for weight loss drugs, Stewart said. I think many insurance companies are going to push back against patients and employers saying, well, you have a drug or access to these drugs at $149, $150 a month, whatever they may be. And so that's really how this patient should be accessing those drugs, rather than through a prescription drug benefit. So that's going to be a very dynamic challenge that continues to play out. But this represents another tailwind for biotech stocks, says Murag Amor, formerly the head of Alnylam. By and large, pharma companies are the ones getting pushback on their drug prices. They are also facing off in drug pricing negotiations with Medicare under the Inflation Reduction Act. All of this means more of a head start for the biotech innovation through buyouts and other deals. Ironically, it does help biotech in some ways, because it creates this need for pharma to access innovation from biotech more voraciously than they might before, he said. But I think of MRV and tariffs and the IRA. In general, the market has realized that pharma will figure out those too. Will the FDA rattle stocks? Still, headwinds remain. From a regulatory standpoint, high-profile turnover at the FDA could shake investor confidence. Most recently, Richard Pazdur left his post as the director of the Center for Drug Evaluation and Research at the FDA. Before that, he founded and led the Oncology Center of Excellence within the agency for 20 years. Reports suggest Pazdur left the agency after clashing with FDA Commissioner Marty Makary over a new drug review program, the Commissioner's National Priority Voucher. Before that, Peter Marks, the longtime director of the Center for Biologics Evaluation and Research, left the FDA following a public feud with Kennedy, the Health and Human Services Secretary. Pazdur and Marks have since been replaced by Tracy Beth Hogue and Vinay Prasad, respectively. Both are known for voicing concerns about COVID vaccines prior to taking up their new posts. Recently, reports said Prasad passed an internal memo suggesting COVID shots killed 10 people between 2021 and 2024. The memo was quickly verified and have been disputed by other experts. We need a stable FDA, Murag Amor said. We need certainty at the FDA, and we need to make sure the FDA is grounded in science, not influenced by politics. Unfortunately, that's been rather challenged lately. Brenner, of Bio, says shakiness at the FDA could hurt investor confidence in biotech stocks. With a lot of delays, with a lot of overturned decisions, I think that would be a very, very dangerous path to travel on for US biotech, he said. Biotech stocks are in the lead. Still, overall sentiment remains positive for biotech stocks, though there's still much to be ironed out from the most favored nation executive order, tariffs and the specter of China looming over U.S. biotech. The industry group finished the year ranked second out of 197 industry groups IBD tracks based on 6-month stock performance. Of the IBD 50 list of elite growth stocks, nearly 30% are biotech stocks. The industry group currently has an almost perfect IBD relative strength rating of 98. This means shares rank in the leading 2% of all industry groups in terms of 12-month performance. Ural, of EY, says the biggest disruptions to the biotech business tariffs, drug pricing reform and regulatory uncertainty have already been baked into the stocks. Referring to the year-to-date performance of the SPDR S&P Biotech ETF, XBI, as of mid-December, he said, the XBI is actually almost double that of the S&P 500. I can't believe I'm making that statement after that sector being in the gutter for the last 2 years, Ural added. My estimate now that the Fed's direction is known, and the impact of the tariffs is somewhat understood with how they're bundled with most favored nation pricing. All of that seems to be pointing towards a recovery and going back to historical norms. 5 biggest biotech stocks. Amgen 172,1 bil. Market cap 25,6% 2025 gain. Pfizer $147.6 bill market cap 32.9% 2025 gain. Vertex Pharma $113.3 bill market cap 12.6% 2025 gain. Banco 91 bil market cap 54,4% 2025 gain. Alalam, $52.1 bill market cap, 69% 2025 gain. Source, Market Surge, shares of IBD Medical, Biomed Biotech Industry Group rose 33.3% times as of the 5th of January 2026. 2. Business Briefs. From page 2. Small caps lead broad rally. The Russell 2000 jumped while the big cap indexes had solid gains. The Russell, S&P 500, and Dow all hit highs during the week. The Nasdaq is getting closer despite some heavy selling for many techs on Thursday. Nvidia, NVDA, and AMD. AMD retreated despite unveiling new AI chips. But many stocks rallied anyway, and the 10-year yield was little changed for the week while crude oil futures rose. Jobs weak, but Fed odds fall. Friday's December jobs report was weak by most measures, but markets pushed out expectations for the next Fed rate cut until June, likely because the unemployment rate fell to 4% to 4.2% after November's downward revision to 4.5%. The 50,000 payroll gain included 37,000 private sector jobs, slowing to 29,000 a month over the past 3 months. Healthcare payrolls accounted for all reported job growth. Manufacturers cut jobs again. Still, there are some indications the economy has remained resilient so far. The Institute for Supply Management Services Sector Index rose to its highest level in a year in December, though the ISM Manufacturing Index signaled a deeper contraction. NVIDIA, AMD 2 new AI chips. NVIDIA, NVDA, and AMD introduced their latest processors for running artificial intelligence applications in data centers. At the CES event in Las Vegas, NVIDIA detailed its Rubin platform, due out later this year. Meanwhile, CEO Jensen Huang said NVIDIA is preparing to ship older generation H200 chips to Chinese customers once it receives U.S. export licenses. But media reports indicate that China's government is trying to limit H200 imports. Elsewhere at CES, AMD previewed its next-generation Radeon graphics card, the Instinct MI200 series GPUs, set for a 2027 release. NVIDIA fell modestly while AMD plunged. Taiwan Semiconductor, TSM, which makes NVIDIA and AMD chips, said December sales rose 20.4% versus a year earlier. Shares edged up within a buy zone. AI is key theme at CES 2026. The AI megatrend permeated the CES event. Makers of PCs, consumer electronics, household appliances and other gear discussed how they are using AI to drive services. Industrial giants including Caterpillar, CAT, Deere, DE, and Oshkosh, OSK, showed how they too are infusing AI capabilities such as autonomy into their vehicles. Meanwhile, robots of all types roamed the convention floor, including humanoid forms from over 36 vendors. Meanwhile, Tesla CEO Elon Musk reportedly backed his new robot with his startup, will now develop the software for the Optimus robot. Oil stocks swing on Venezuela. After the January 3 strike where the U.S. seized Venezuelan leader Nicolas Maduro, President Trump said that U.S. oil companies will need to make big investments in Venezuela's decrepit oil infrastructure. Trump said Saudi Arabia also will be turning over 30 million to 50 million barrels of oil to the U.S. Analysts said that U.S. oil and gas producers are unlikely to invest in the near term. Chevron, CVX, the lone U.S. oil producer with ongoing operations in Venezuela, is widely seen as best positioned. Oil services firms Halliburton, HAL, and Schlumberger, SLB, are also active in the country. Halliburton in Venezuela, Valero Energy, VLO, and some other refiners with Gulf operations set up for Venezuela's cheaper heavy crude rallied. Canadian producers retreated. Defense volatility on Trump. Trump Wednesday proposed a $1.5 trillion Pentagon budget for fiscal 2025. A $100 billion hike in spending for a $500 billion jump will happen. It bodes well for outlays. Carmen, KRMN, and AeroVironment, AVAV, were big stock winners. Big contractors tumbled Wednesday after Trump pledged to halt their dividends and buybacks until they expedite deliveries. Defense giants such as Lockheed Martin, LMT, rebounded in the week. Tesla faces more competition. Tesla, TSLA, is facing increased competition in self-driving, as NVIDIA announced its own autonomous vehicle AI, known as Alpamayo. At CES, NVIDIA CEO Jensen Huang unveiled Alpamayo, which will come to the US in Q1 in some Mercedes-Benz vehicles. Huang added that the plan is to roll out the autonomous system in Europe and Asia after the US. Meanwhile, NVIDIA said it is working with robotaxi operators with the goal of true self-driving as soon as 2027. EV maker Lucid, LCID, in October announced a partnership with NVIDIA to develop a hands-off, eyes-off driving system. At CES, Lucid, Uber, and AI startup Nuro launched the look of their planned robotaxi, one of many Uber self-driving collaborations. Ford, F, announced plans to introduce eyes-off driving tech in 2028 on an upcoming $30,000 all-electric vehicle. Musk, who predicted a month ago that Tesla Robotaxis would be self-driving, appeared to push back on his timeline. Tesla stock rebounded back above its 50-day moving average. Meta sits nuclear power deals. Meta Platforms, Meta, announced several agreements Friday in the latest round of nuclear AI data center deals that have underlined nuclear stocks for the last 2 years. Vistra, VST, said it entered into 20-year power purchase agreements to provide more than 26 megawatts of nuclear energy from 3 power plants to support Meta operations in Ohio and Pennsylvania. Oklo, said its Meta deal advances its development of a 1.2 gigawatt campus in Pike County, Ohio. Also, Vistra will buy Cogentrix Energy and its 10 natural gas generation facilities for around $4 billion. Vistra and Oklo spiked Friday. Bloom Energy, BE, surged more than 25% on the week as a Wyoming data center project won a key approval. The project is expected to include 900 megawatts of Bloom Energy fuel cell power generators. Meanwhile, American Electric Power, AEP, will buy $2.65 billion in fuel cells, with speculation that Bloom Energy is the supplier. Eli Lilly confirms Venturi deal. Eli Lilly, LLY, confirmed late Wednesday that it will buy Venturi Pharmaceuticals for about $1.6 billion or $14 a share. Deal buzz had lifted Lilly stock above a buy point in Wednesday's regular session and sent Venturi stock flying. Venturi is working on treatments for inflammation and chronic disease. In brief, Applied Digital APLD broke even for fiscal Q2 2026, while revenue jumped 98% to $126.6 million, but easily beating views for the AI data center play. Shares rose. CrowdStrike, CRWD, continued its acquisition spree, announcing that it will buy identity security firm SNCC for $15.4 billion, mostly cash. CrowdStrike fell. Microchip Technology, MCHP, said it expects revenue for the December-ended fiscal Q3 to be at $1.183 billion, above its prior guidance. Shares gapped higher at day point. Acuity Brands, AII, reported an 18% EPS gain, topping views, while a 20% revenue rise to $1.14 billion was in line. Shares of the lighting products firm tumbled. Commercial Metals, CMC, posted a 12.2% EPS gain, solidly beating, while a 9.1% revenue rise to $1.47 to $2.12 billion, slightly beating. Both showed accelerating growth for a second quarter. The specialty metals firm fell on Thursday, but rose slightly for the week after hitting an intraday high Tuesday. PriceSmart, PSMT, slightly missed Q1 EPS views with a 7% gain. A 9.5% revenue rise to $1.38 billion slightly beat, with sales growth slowly accelerating for a third straight quarter. The Caribbean and Latin America warehouse chains signaled further expansion. Revolution Medicines, RVMD, surged on takeover reports, first that AbbVie was in talks and later that Merck, MRK, is close to buying the cancer biotech. A Sharpa North robot deals poker at CES in Las Vegas on Wednesday. Humanoid robots stole the show at the annual tech show, where they dealt card hands, folded laundry, poured coffee, and played table tennis all within feet of each other. Sharpa is based in Singapore. The New America. From page 4. Article. This blazing software play doubled in 2025. What's next about JFrog? By Scott Lettinen. JFrog, Frog, stock has rebounded sharply since hitting all-time lows in May 2025 to key support level ahead of the software company's recently reported breakout year. The company broke new ground since February, when it launched its first publishing and publishing tools that help spot the development cycle. When the software company reported earnings in 2020, JFrog shares surged 26% in one day. Calling the process liquid software, JFrog is enabling a fast flow of software seamlessly and securely from the developer's laptop to the edge. The company went public in 2020. Can this company leapfrog its AI-tied rivals? $5.1. Limited. Quarterly revenue. $5.1. Limited. Onto+ subscriptions. $5.1. Limited. Premium revenue. $5.1. Limited. According to a broad package of categories, Haim highlighted the impact of moving throughout 2025. JFrog as the leading DevOps company is focused on the truth for a software package. For the fourth quarter, earnings are due out early February. On November 7, JFrog stock staged a powerful breakout past a 42.38 buy point in a flat base, according to Market Surge. The 5% buy zone ran up to 44.5. Shares are now extended beyond that buy range. The software stock is in a potential 3 weeks tight pattern, offering a 44.55 entry. But volume has been light during the pattern. JFrog stock has an IBD composite rating of 99, according to IBD Stock Checkup. The rating shows JFrog stock outperforms 99% of all stocks in key stock picking factors. That's due to a group of factors that have been picking up. IPO filings soon to be priced. Table of IPO filings with details on companies like Public Policy Holding Co., etc. The most powerful stock research tools, all in one platform. Only Market Surge gives you. The Growth 250 stock list, created by portfolio managers to dynamically identify the best growth stocks. Streamlined interactive charts, see important fundamental and technical data right next to every chart. Patterns and buy points are automatically recognized. To take a discounted trial, go to investors.com/marketsurge. 4. Internet and Technology. From page 5, article. Uber was a winner in Las Vegas with CES 2026 spotlight on AVs. Robotaxis are on a roll. Autonomous vehicles take center stage at Las Vegas Technology Show. By Ryan Deffenbaugh. Autonomous vehicles are one of the stars of CES 2026. That's been the case since Uber Technologies unveiled its own autonomous vehicle concept with Lucid, LCID, and Nuro at the show in Las Vegas. First, NVIDIA CEO Jensen Huang opened the CES trade show with a keynote on Monday, highlighting the company's advancements in autonomous driving tech. NVIDIA, which will come to Mercedes vehicles in the US in Q1, NVIDIA plans to roll out the autonomous system in Europe and Asia after the US. Meanwhile, NVIDIA said it is working with robotaxi operators with the goal of true self-driving as soon as 2027. Uber said it expects the launch of the robotaxi in the Bay Area later this year. Uber stock slumped more than 17% in the final 3 months of from down about 20% from November down to positive concerns from robotaxis have hard to shake. The company has a working with Tesla, TSLA, and Waymo, Gug, to add their robotaxis to its app. But NVIDIA plans to test a Uber to its app. The company is also working with Hyundai on autonomous vehicles. Tech leaders. AMD serves notice to NVIDIA with its new AI processor. By Investors Business Daily. Las Vegas. The demand for data center computing capacity for artificial intelligence applications is so ginormous that AMD Chief Executive Lisa Su is looking forward to supplying chips to a new word like zettaschale. That is 1,000 times larger than the global compute infrastructure in 2022, and more than this in zettabytes in 2022, according to IDC. We have seen a huge interest in the Animal Tech Conference, a increase of 100 times in just a very short period of time. But that's not all, she added. To enable AD everywhere, we need to increase another 100 times over the next few years. So, 10,000 times more company had in 2022. So no wonder the 5-year, $0. 10 yottabyte is 10,000 times more companies than we had in 2022. You can see nothing yet, she said. NVIDIA, showed how it is going toe-to-toe with larger rival NVIDIA in chips for artificial intelligence. Not just GPU processors, software and systems. During her presentation at CES 2026, Su previewed AMD's next-generation graphics processor, the Instinct MI400 series, with the company's new XDNA 2 AI engine. Su also provided a look at the company's upcoming Helios rack-scale system for high-performance computing and AI. 5. Weight loss drugs continue to drive biotech industry. This is the continuation of biotech outlook for 2026 from page 6, as noted above. See the merged content in section 1 for the full article. 1. Tesla takes a leap of faith. From page 1, continued on page 8, as battery storage a bright spot for Tesla's business. The EV maker's primary business is stalling. The future now rides on full self-driving and robotaxis. By Kit Norton. 5 months after Tesla CEO Elon Musk warned that the EV giant could have a few rough quarters through mid-2026, his words have proven all too true. EV sales, still the vast majority of Tesla's business, fell for a second straight year, with no new traditional models on the horizon. Investors have abandoned the sour view that knocked Tesla stock to a 52-week low of 138.8 inches April 2025. Since Musk's EV company in June unlocked, the first tweak has shot up 250%, reaching record highs as the new year neared. The rise reflects growing enthusiasm for the 3 businesses touted as Tesla's future growth engines: humanoid robots, battery storage and autonomous driving and robotaxis. Never mind major question marks surrounding all 3 of those businesses. If 2025 drags on without truly autonomous driving, Tesla could have a bumpy downside, especially if the EV business and earnings continue to weaken. But for now at least, Musk's vision of the future has won new believers. The past 2 years have been a transitional period for Tesla, with the legacy EV business slowing and its focus turning to the future and what the EV wave will be. Andrew Rocco, a Zacks investment research strategist who is long Tesla, told IBD. He sees Tesla stock as a breakthrough in 2026. Many Tesla analysts echo the positive view. Dan Ives, a longtime bull, predicts a defining year for Tesla thanks to autonomy. Bullish investors and analysts have pinned their hopes on Tesla, those businesses. If 2025 drags on without truly autonomous driving, Tesla could have a bumpy downside, especially if the EV business and earnings continue to weaken. But for now, the past 2 years have been a transitional period for Tesla, with the legacy EV business slowing and its focus turning to the future and what the EV wave will be. Andrew Rocco, a Zacks investment research strategist who is long Tesla, told IBD. He sees Tesla stock as a breakthrough in 2026. Many Tesla analysts echo the positive view. Dan Ives, a longtime bull, predicts a defining year for Tesla. Bullish investors and analysts have pinned their hopes on Tesla. Battery storage. A bright spot for Tesla's business. Continuation. Tesla, from a one, true self-driving, rolling out rapidly in 2026. In recent weeks, videos on Elon Musk's social site X appear to show Model Y vehicles driving around Austin without a safety monitor inside. Musk on December 14 confirmed that testing is underway with no occupant in the car. He noted that the vehicles in the videos were truly unsupervised, or if support cars have safety monitors nearby. Tesla has said its Cybercab should begin production in April. With no steering wheel or pedals, the two-passenger Cybercab will require self-driving to hit the road. We expect an accelerated robotaxi launch across the U.S., with important volume production of Cybercabs starting in the April-May timeframe. In a nutshell, we believe Tesla is taking major steps in advancing its AI revolution path, with autonomous and robotics front and center, heading into 2026 that will be a game-changer and define Tesla's future. Ives wrote. Ives expects Tesla ride-hailing to roll out in major cities in Q3 2026. In 2026, he has a 600 price target on Tesla stock, which now trades near 450. We believe Tesla could reach a $2 trillion market cap over the coming year, and in a bull case scenario, $3 trillion by the end of 2026, Ives said, as full-scale volume production begins of the autonomous and robotics revolution. Tesla has a current market capitalization of around $1.5 trillion. A million robotaxis. Morgan Stanley analyst Andrew Percoco predicted in a December 15 note that Tesla will meaningfully increase its robotaxi fleet size in 2026 to 1,000 vehicles, up from an estimated 30 to 150 on the road now. By the end of 2026, we expect Tesla to have 1 million robotaxis on the road across multiple cities, Percoco wrote. Once unsupervised robotaxis roll out in geofenced areas of Austin and other markets, the expectation is that Tesla would quickly shift full self-driving to unsupervised as well. Even more recently, doubled down on his year-end 2025 forecast for an unsupervised Tesla robotaxi service in Austin. Even the most fervent fan knows that Musk's timelines for Tesla self-driving have been, at minimum, wildly optimistic. The Tesla CEO has predicted true autonomy this year or next year for nearly a decade. Those deadlines generally have come and gone with little discontent, with investors quickly shifting to the next year target. However, Musk's latest promises have been so near-term that they raised expectations that this time they would come true, if not by December 31, then very soon after. That raises the stakes for a Tesla stock that has been largely structurally unsupervised vehicles well into 2026. Alphabet. Google, owned Waymo and Amazon, AMZN, owned Zoox are ramping up activity, with Waymo set to significantly expand the number of cities it operates in. Several Chinese firms, including Baidu, Bidu, and WeRide, WRD, are operating or testing robotaxis in a growing number of countries. Tesla's vision-only system is still significantly cheaper to build than the multi-sensor Waymo and Zoox, though Baidu's latest Apollo Go robotaxis are below $30,000. Tesla's mass production means that the EV giant could scale up rapidly. This is why bulls see such a big opportunity. For the longer Tesla takes to reach true autonomy, the more time rivals have to scale up and narrow the cost gap. Musk's other recent near-term prognostications for Tesla robotaxis have missed the target. On the Q2 earnings call on July 23, Musk predicted that the Tesla ride-hailing service would cover half of the U.S. population by the end of 2025. On the Q3 call, Musk downsized that to 8 to 10 major metro areas. But the robotaxi Sir. Vice ended 2025 inches just Austin in the Bay Area, with a limited number of vehicles. Along with self-driving, the Optimus humanoid robot is a potential TSLA stock driver. But even under Musk's latest timeline, it's unlikely to be a factor for Tesla's business in 2026. Musk said on the Q3 earnings call that Tesla will unveil a new Optimus sometime in early 2026. But much work is still needed. Musk said Tesla will continue to work on the all-important hands throughout 2026, explaining in detail how hard it is to replicate human hands. As recently as May, Musk predicted thousands of Optimus robots would be working in Tesla factories by the end of 2025. Optimus faces a lot of competition from other humanoid robot developers, many of which are in China. China also dominates the supply chain for key components. It's still not clear what the use case will be for humanoid robots generally. Unlike self-driving technology and humanoid robots, the self-energy battery storage business is a current operation with rapid growth and fat profit margins. Offerings range from home Powerwalls to grid-level megapacks. The battery storage segment remains a relatively small portion of overall revenue, which is still dominated by the ailing automotive business. Tesla is expanding megapack production capacity, including at its Lathrop, Calif. Facility. Tesla Energy powers higher. Tesla deployed a record 14.2 gigawatt-hours of energy storage in Q4, up 29% compared with Q4 2024. Overall in 2025, Tesla deployed 46.7 gigawatt-hours of energy storage, marking a 49% increase compared with 31.4 gigawatt-hours in 2024. Morgan Stanley's Percoco values the Tesla energy business at $40 per share. He noted that since 2022, its battery storage deployments have grown at a compound annual growth rate of 91%. Tesla held an 18% share of the global battery storage market as of 2024, according to Morgan Stanley. Percoco estimates Tesla Energy's storage business by 2030 might do well grow 18% a year through 2040. Total Tesla energy and storage revenue is forecast to swell from $10.09 billion in 2024 to $16.86 billion in 2026, continuing to grow to $110.51 billion by 2040, according to Morgan Stanley. Its gross margins in the business rose from 7% in 2022 to 30% in 2025, Morgan Stanley says. Those margins are expected to come in at 29.9% in 2026. President Donald Trump's tariff policies could hit Tesla's energy storage business, even as the EV giant may be passing on those costs to customers. Their energy business is really the most consistent growth area, Rocco said. With the build-out of AI data centers, they're going to need those storage batteries. Thomas Martin, a senior portfolio manager at Global Investments, agreed, but warned that Tesla Energy is facing increased competition. He noted that Ford F and General Motors GM are redirecting battery production capacity to stationary storage, much like Tesla Energy. That could cut into Tesla's dominance in the space. Tesla Energy also faces significant competition from Chinese storage makers, including Tesla battery suppliers, CATL, and EV giant, BYD/BYD-DP. Still, battery storage demand far exceeds current supply, especially in the protected U.S. market. Tesla EV business in reverse. But the outlook for Tesla's main business of selling EVs is entirely different. They, of course, are still getting the lion's share of their revenue from that legacy EV business, so it is critical to show, in 2026, that they've sort of stopped the bleeding, Rocco said. The excitement is around FSD, but we still want to see some stabilization for EV sales. Tesla is facing sales pressure in Europe, China, and the US. The EV giant's global vehicle deliveries in 2025 fell for a second straight year, declining 8.6% to 1.64 million. At the start of the year, Tesla deliveries were forecast to rise to 2.06 million, according to FactSet. Deliveries sank in 2025 despite a refreshed Model Y and expiring or declining tax credits in the US, China, and Norway, which pulled demand forward. Tesla's EV sales hit a record 497,099 inches Q3, but that was due to the $7,500 US tax credit expiring on September 30. Since then, US EV sales overall have plunged. On January 2, Tesla reported that Q4 global deliveries dropped 15.9% compared with Q3 to 418,227. Analysts forecast Tesla deliveries will rise nearly 12% to 1.83 million vehicles in 2026, but they have cut those targets considerably over the past 12 months. Absent self-driving, it's not clear what would boost Tesla EV sales. In 2026, Tesla will have no new models except for the Cybercab, which won't happen without self-driving. Meanwhile, other EV makers are working on making new or updated models, especially in China. Competition will be more limited in the US, but the revived GM Bolt and the Rivian, RIVN, R2, are highly anticipated. Meanwhile, zero-emission credits, ZEVs, already on the wane, are set to fall sharply in the coming quarters. Tesla has long sold popular cars in the US, at a time when they can pass emission standards. It's been pure profit for Tesla. But Tesla no longer gets new ZEV credits in the US, thanks to President Trump's One Big Beautiful Bill Act. Tesla's weak European sales also will reduce ZEV credits there. Tesla's EV business still matters a lot, Martin said, and if that unit again misses estimates, it would be harder for TSLA stock to outperform the S&P 500. That could be overridden if full self-drive ing is really done, he added. Tesla earnings are expected to fall 32% to $1.64 a share in 2025, the third straight sizable annual decline since they peaked at $4.07 in 2022. The FactSet consensus for 2026 is for a 32% gain to $2.16, but 2026 estimates nearly halved from the start of 2025, when analysts saw $4.75. That's a pretty big come down, Global's Martin told IBD. Yet in the face of falling profit expectations, Tesla's shares have still advanced. An automaker with falling sales, rapidly declining profits, and no new models, with one key exception, on the horizon would typically have a low price-earnings ratio. GM and Ford, which are expected to roll out new models and see earnings rebound in 2026, have PE ratios of 8 and 10, respectively. Tesla's was an eye-watering 254 as of December. FSD demand. That speaks to investors' faith in Musk's growth plan for Tesla. Analysts agree that EV sales will strengthen if the Tesla Robotaxi scales up successfully and unsupervised FSD launches in 2026. On the Q3 earnings call, Tesla Chief Financial Officer Vaibhav Taneja said that the paying FSD customer base is still small, around 12% of our current fleet. Auto fidelity is an issue. Currently, FSD supervised costs $99 per month. It also can be bought outright for $8,000, down from a peak of $15,000. Taneja argued on the Q3 call that as people experience supervised FSD at scale, the demand for Tesla vehicles will increase significantly. While the latest FSD V14 appears to be a big improvement, full self-driving deliveries mean revenue at Level 2 driver assist system. That means drivers are still legally required to pay attention and be ready to take over at any time. Martin said that if Tesla reaches true FSD, one would think that it would increase adoption a lot. Regulatory liability concerns. The National Highway Traffic Safety Administration has opened a number of investigations into Tesla's Autopilot and FSD over the years. But those probes haven't brought any serious restrictions in their current driver assist environment. Many states, notably California, require significant self-driving tests and reporting before a robotaxi operator can switch unsupervised rides to paying customers. In Texas, Tesla will need state DMV authorization as a Level 4 self-driving vehicle to provide paid robotaxi rides starting the 26th of May 2026, when new regulations are fully enforced. Level 4 vehicles are able to drive unsupervised in certain geofenced areas. Level 5 would be unsupervised anywhere. Regulatory red tape is the main risk to Tesla stock, and the all-important FSD in 2026, Rocco argues. If the technology is road-ready, a robotaxi business could be the big risk from rolling out unsupervised robotaxis and FSD, then will be that Tesla would assume full liability. Serious crashes and fatalities could bring huge lawsuits and a regulatory crackdown. That's why Musk has been moving really cautiously, Rocco said. Even partial liability has risks. In August, a Miami federal jury found Tesla responsible for the 2019 death of a pedestrian who was struck by a vehicle that was in autopilot. Plaintiffs expect the EV maker to be responsible for $242.5 million of the $329 million award. That trial revealed Tesla crash data and other information that may help plaintiffs in other autopilot or FSD cases. A month later, Tesla settled 2 cases around deadly crashes involving autopilot. Tesla's stock performance. Rocco expects Tesla stock to outperform the broader market in 2026. Musk and the Tesla brand took a bad reputational hit in early 2025 from his foray into politics, weighing on TSLA shares, according to Rocco. These expectations are slowly moving away, he said. Since April lows, TSLA has more than doubled, helped in part by the June 22 Tesla Robotaxi launch in Austin with safety monitors. Tesla stock hit a record, 498.83 on December 22, but has pulled back since then. Shares are now modestly below a 474.07 cup base buy point. More with big moves, Tesla is prone to big drops. Despite its huge move in recent months, TSLA ended the 2025 stock market up 11.4%, lagging the S&P 500's 16.4% advance. That's well behind General Motors and Ford, up 53% and 32.5% respectively. Tesla rates solidly on technical measures based on its stock performance and key chart and trend indicators due to its weak earnings. The stock has an overall 77 composite rating out of a best possible 99 as of December 31. TSLA also has an 85 relative strength rating and a 46 EPS rating. The relative strength line, which tracks a stock's performance versus the S&P 500, recently hit its highest level since January. Meme stock or growth stock? Ultimately, Tesla's stock performance will rest not just on investors' trust in Musk's strategies and execution, but whether that belief proves out. Michael Burry, of The Big Short fame, said in a November 30 Substack post that Tesla's market capitalization is ridiculously overvalued today and has been able to perform. As an aside, the Elon cult was all in on electric cars until competition showed up, then all in on autonomous driving until competition showed up, and now is all in on robots until competition shows up, Burry wrote. Martin said that, as a fundamentally based manager, he is looking for excess fundamental exuberance to decide whether a stock is attractive or not. You just haven't been able to do that with Tesla, Martin said. The last time, in my view, that you could do that was when they started to get profitability in the EVs, and they were really growing sales and improving margins. And that's when the stock really took off. People are all in on meme stock, but it is driven to some extent by retail investors and by hope, Martin added. He's skeptical Tesla will be able to meet expectations when it comes to autonomous driving and the robotaxi rollout. For a normal investor, is Tesla pure speculation? No, there are fundamentals there, but there's a lot of volatility, he says. It's hard to be more careful as to how much capital you commit, he said. Martin says he could see a scenario where Tesla beats or meets expectations for unsupervised FSD and the robotaxi rollout, and TSLA stock could outperform the S&P 500 in 2026. And if Tesla doesn't beat expectations, then will people have the S&P because people are still hoping for 2027, and people want to like this company, Martin said. Tesla, EV, deliveries, Tesla earnings per share, Tesla robotaxi fleet forecast. Source: FactSet, Morgan Stanley and Company reports. 2. CES to map AI's cutting edge. From page 7, as humanoid robots invade CES as AI takes spotlight in Vegas. Artificial intelligence. In focus. Industrial technology will also make its presence known at the annual show. By Patrick Seitz, Investors Business Daily. The annual CES Technology Trade Show in Las Vegas promises to showcase spotlight on the massive embodiment of AI in a plethora of devices. The 4-day CES 2026 officially opens Tuesday after 2 days of media preview events. Exhibitors are expected to show how AI is expanding from data centers running large language models into devices on the edge of networks. Those devices range from AI-enabled smart glasses and robots, to life-logging gadgets, to robotaxis and humanoid robots. AI chipmakers, including NVIDIA, NVDA, and Advanced Micro Devices AMD, will have a prominent presence at the show, just like they did last year. Time Magazine's 2025 Persons of Year, NVIDIA CEO Jensen Huang, and AMD CEO Lisa Su, among the politicians. Patrick Henry, AI, will be speaking at CES 2026. Industrial Hardware Spotlight. The upcoming CES will move further from its historical roots as the Consumer Electronics Show by giving added importance to industrial hardware firms. CES 2026 will feature keynote speeches from the chief executives of U.S. heavy equipment builder Caterpillar, CAT, and German tech conglomerate Siemens, CG. In addition to Caterpillar and Siemens, other industrial firms exhibiting at CES this year include U.S.-based Deere, DE, and Oshkosh, OSK, Bosch of Germany, Kubota, Kubmi, of Japan, and South Korean firms Doosan and Hyundai. It's become more like an industrial show and less about finished consumer goods, Marjorie Costello, editor and publisher of CE Online News, told Investors Business Daily. Following the money to AI. CES has shifted its attention to AI as it follows where the investment community is pouring money, she said. Patrick Moorhead, chief analyst and CEO of More Insights and Strategy, concurs. Trends at CES are coincident with where all the money is being made, he told IBD. AI will be everywhere at CES 2026, possibly with a stronger emphasis on agents. AI, he said. Agentic AI involves a system that can learn on your behalf, such as planning and booking travel, Moorhead said. Showcase at the Sphere. China-based computer maker Lenovo, LNVGY, will take over the iconic Sphere Theater on Tuesday, replacing for the day the hit experimental version for the classic movie musical The Wizard of Oz. Also headlining an event is Tom Hale, CEO of Oura, which makes the popular health and fitness smart ring called Oura Ring. Speaking of wearables, in addition to smart rings and fitness bands, this year's tech conference will see many vendors with smart glasses. Meta Platforms, Meta, will be on site with its latest smart spectacles along with a host of startups. Intel's CES 2026 debut is focused on a new class of AI-enabled wearable devices that act as life loggers. These pendants and pins record your activities and conversations for note-taking and memory aids. Among the companies showing off such gadgets are HyperAI, Lookie, Omi, and Plod. OpenAI's mystery product. Those firms are trying to get ahead of a mystery screenless AI device from OpenAI. Former Apple, AAPL, designer Jony Ive is developing that product for the ChatGPT company, which acquired his firm, IO Products, last July for $6.4 billion. Amazon, Kung, AMZN, and Meta are working on similar AI gadgets. Amazon bought AI wearables firm Ray in July, and Meta purchased AI wearables startup Limitless in early December. AI wearables that record everything could prove super useful for providing reminders and assembling to-do lists, Moorhead said. But the always-on devices will run into privacy concerns, he said. Artificial intelligence will be as much of a marketing siren as a feature of products at CES 2026. Ahead of the tech show, companies are pitching such devices as AI barbecue grills, AI treadmills, AI toothbrushes, AI pet food dispensers, and AI litter boxes. Chip makers aside from device makers, CES is the meeting place for countless companies making hardware and devices suppliers. Semiconductor firms are especially well represented at the show. In addition to AMD and NVIDIA, prominent chip makers at CES 2026 include Analog Devices, ADI, Intel, INTC, Marvell Technology, MRVL, Monolithic Power Systems, MPWR, Qualcomm, QCOM, and Texas Instruments, TXN. Several processors won't make. Intel will use CES 2026 as the launching pad for its Intel Core Ultra processors series. 3 processors, code-named Panther Lake. Those CPUs will power next-generation PCs and other computing devices. CES has morphed into a hodgepodge of shows within a show. It has conference programs devoted to digital media and advertising, health and fitness, mobility, AI and quantum computing, and more. Last year, CES attracted 142,465 people from around the world, up 2.7% from 2024, according to the Consumer Technology Association, which produces the show. More than 4,500 companies exhibited at the 2025 show. Robots taking over. In 2026, AI-enabled robots will be ubiquitous at the show. The category includes robotic vacuum cleaners, floor washers, carpet cleaners, lawnmowers, and pool cleaners. Plus, given the emphasis on industrial tech at CES 2026, there will be autonomous heavy equipment for earth-moving, farming, construction, and more. One of the most talked-about categories of robots at CES 2026 is likely to be humanoids. More than 36 companies, many from China, will be showing off humanoid robots, and robots doubling as the show. Those bots are designed for commercial as well as consumer applications. That includes everything from factory and warehouse applications to caring for the elderly. Several firms will be showing off wearable exoskeleton technology that provides robotic support for humans. Some devices are meant to assist users for walking. Others are designed to support your back and arms when doing heavy lifting. Robotaxis will be another theme at CES 2026, with showcases from Alphabet, Google, Unit Waymo, and Amazon Unit Zoox. RGB mini TVs take on OLEDs. Another technology likely to generate buzz at the show is Satellite to Mobile Device Services Globalstar, GSAT. Iridium Communications, IRDM, and Starlink, a unit of Elon Musk's SpaceX, each will have a presence at CES 2026. CES 2026 will still see an array of consumer electronics, despite its shifting focus to enterprise and industrial tech. The catch on the show floor will be the screen TVs boasting greater color accuracy and brightness. New video technology being demonstrated by major vendors will be RGB mini and RGB micro displays. Virtually all the major TV brands are going to have mini and micro RGB TVs, CE Online's Costello said. That's the next technology that's getting consumer attention. CES 2026 will show off a diversity of consumer tech products from AI PCs and drones to smart home and kitchen products. We'll have thousands of exhibitors across AI, robotics, digital health, mobility, enterprise, energy, immersive entertainment, and the hot category of accessibility, says Shannon Leifus, executive of the Consumer Technology Association, said during a recent media briefing. 3. Business briefs. From page 2. Stocks fall as 2025 ends. The stock market retreated to key levels at the end of 2025, with Friday's market bounce turning mixed after the New Year's Day holiday. Chip stocks such as Taiwan Semiconductor, TSM, had a strong week, while software struggled. Treasury yields rose toward 4-month highs. Despite the late fade, the market finished the decade with a bit farther solid annual performance. Silver led a huge year for metals, while crude oil, Bitcoin, and the dollar were weak. Tesla deliveries fall short. Tesla, TSLA, reported Friday that global fourth-quarter deliveries sank 13.6% to 418,227. That number included 406,385 Model 3 and Model Y. Tesla is such as 11,642 other vehicles, which include the Model S, Model X, and Cybertruck. Tesla produced 434,358 EVs in Q4. For 2025, Tesla delivered 1.64 million vehicles, an 8.6% decline versus 1.79 million in 2024. For energy storage, Tesla deployed a record 14.2 gigawatt-hours of energy storage in Q4, a 29% yearly gain, surpassing forecasts. Tesla missed CEO Elon Musk's recent forecast for removing safety monitors from Robotaxis in Austin by the end of 2025. Shares fell sharply after hitting a record high on December 22. Rivian reported that Q4 vehicle deliveries dropped 31% to 9,745, while production declined 14% to 10,974. For the year, deliveries fell 18% to 42,247 vehicles, with production off 5% to 42,284, amid supply chain woes. Q4 deliveries fell short, but quarterly and full-year numbers were in line with Rivian's most recent targets. Rivian transitioned some production lines in 2025 with its new RS SUV EV expected to begin deliveries in the first half of 2026. Rivian stock fell solidly after recently hitting a 2-year high. China EV, sales mixed. BYD, BYDBF, XPeng, XPV, NIO, Xiaomi, JIO, and Li Auto reported December, Q4, and full-year sales. BYD saw vehicle targets EV sales grew. December sales skid 18.3% year-over-year, but 2025 sales rose 7.7% to a record 4.602 million, fueled by overseas demand. Passenger BEV sales jumped 27.9% to 2.257 million, far above Tesla. Xiaomi, whose EVs are direct rivals to Tesla, hit a monthly record high above 50,000. XPeng and NIO also had record monthly sales, though XPeng's Q4 deliveries missed expectations. Li Auto had its best month of 2025, but was still down sharply versus a year earlier. Boeing, Airbus rise on deals. Boeing, BA, gained modestly for the week after the Pentagon awarded the Dow giant an $8.6 billion contract to provide 25 F-15IA fighter jets to Israel, with an option for 25 more. Airbus, EDC, signed sales agreements with several Chinese airlines. Among the deals was a sale of 25 narrow-body A320 jets to be among the first of the same model to Spring Airlines. Air China will buy 60 A320neo jets in a deal worth about $9.5 billion at list prices. Airbus continues to significantly outpace Boeing in the Chinese market amid ongoing US-China tensions. In brief, Energy Fuels URU said it topped its previously disclosed guidance for 2025 uranium production and sales. The U.S. uranium producer expected to sell 360,000 pounds of uranium concentrate, or yellowcake, in Q4, up 50% versus a year earlier. Gross uranium sales are expected to total about $27 million, with a weighted average price of roughly $74.95 per pound. Energy Fuels added that it has completed 2 long-term sales contracts with U.S. nuclear energy outfits and that these contracts will add to its deliveries for the years 2027 to 2032. Shares wavered but jumped for the week. Meta Platforms, Meta, will buy AI agent startup Mantis in a deal with a reported value of more than $2 billion. The Facebook parent described Mantis as a leading autonomous general-purpose agent. Mantis debuted in March and has since grown to over $100 million in annual recurring revenue through subscription payments to top AI systems. Mantis is investing hundreds of billions in building data centers toward the goal of developing top AI models. Baidu, BIDU, jumped 1% day after its AI chip subsidiary, Kunlunxin, filed a confidential application for an IPO on the Hong Kong Stock Exchange. Jefferies estimates value the company at up to $23 billion. U.S. export curbs of advanced AI chips spurred a Beijing push to boost domestic chips. FTAI Aviation, FTAI, surged to a high after announcing a big shift into AI. A new FTAI power business will convert CPM-56 aircraft engines into 25-megawatt power turbines for AI data centers. By repurposing its massive inventory of 100-megawatt data centers, plans to produce about 100 units annually starting in 2026. Spritzer Ease cupcakes have permanently closed, leaving 4 shuttered and saddened. The iconic California Cupcake Company announced on December 30 that it was winding down operations at its remaining 15 retail locations around the country, giving employees one-day notice. Private equity firm Karp-Riley Capital Partners bought the franchise in 2012. China forms MOX blockade. From page 2, in Nation and World, China launch large-scale military maneuver DEC 29, surrounding the island of Taiwan in a blockade-like tactic that included the firing of missiles. On Wednesday, China's People's Liberation Army declared the operation a success. News analysts surmised the goals were to assert China's sovereignty over the island and to discourage the U.S. and allies from intervening. China has tentatively set a 2027 timeline for bringing the nation under China's control. 5. Let AI plan your vacation. From page 2, in Nation and World. Let AI plan your vacation. It's never too early to start planning your vacation time in the coming year. What are the travel trends for 2026? Glad you asked. They are odd combinations of analog and AI. Hotel groups, travel companies and travel software are all at the BBC. This will be a year of quiet escapes from screens and stress, itineraries shaped by AI and ultra-personalized retreats. For example, check out the Map of Quietude, a network of places ranked by decibel in the south of Sweden so you can seek out peace and quiet, or Oregon's Skywave Retreats, where guests stay for 3 days in cabins in complete darkness. Meanwhile, moneylenders are using AI for planning and booking, but experts warn about travel scams. Finally, it's roads over runways, as vacationers are showing more interest in road trips than flights to faraway destinations. 6. What your earwax says? From page 2, in Nation and World. What your earwax says? Lowly earwax is inspiring hope of finding new ways to diagnose diseases. Researchers believe the chemistry of earwax, or cerumen as it's known, have discovered that whether a person has wet or dry earwax indicates genetic coding that signals a greater chance of getting cancer or less common systemic illnesses. Earwax, researchers say, works as a sort of conveyor belt. It very slowly works its way out of the ear, keeping the ear canal clean and lubricated and picking up debris before it can clog up other unwanted material. A simple swab of the ear can help detect some illnesses. COVID-19 can be detected in earwax. Earwax can tell if someone has diabetes or a certain form of heart disease. A new diagnostic tool indicates it can identify neurodegenerative diseases such as Parkinson's and Alzheimer's. 7. Company surfs a silver tsunami of profit. As Americans age. From page 5, as the New America article on BrightSpring Health Services. BrightSpring Health Services, Louisville, Kentucky. Company surfs a silver tsunami of profit as Americans age. By Juan Carlos Arancibia, Investors Business Daily. America is getting older and needing more medical care. Experts believe that by 2030, 1 in 5 Americans will be 65 years or older. That segment of the population, including all baby boomers, will be the largest growing age cohort. It is expected to total 71.6 million people, up from 65.3 million in 2025. They'll need a lot more than just physical help. BrightSpring Health Services, BSG, is one of the country's largest providers of specialized care for that burgeoning segment of seniors and others with chronic or complex health problems, as the industry calls them. Patients receive that care in their homes or in settings other than costly hospital stays. The company directly benefits from demographic trends, or the silver tsunami, William Blair analyst Jared Hayes wrote in a note to clients. The aging population has been a common investment theme for healthcare investors over the past decade. However, projections from industry analysts suggest that the growth in the senior population is just beginning to manifest itself. Other trends also favor BrightSpring. Some health conditions are increasingly more common, adding demand for specialized treatment and recovery, said John Rousseau, chairman and CEO of BrightSpring. Meanwhile, Medicare, Medicaid, and private insurers seek to lower costs by providing care at home rather than in hospitals. At-home care is 90% cheaper than hospital care, a company report says. There's some 10% of the population that's 80% of the healthcare cost, and that is who we're serving and who we're trying to take care of, Rousseau told IBD. A specialty pharmacy leader. Louisville Chi, based BrightSpring offers pharmacy, clinical and residential care services under a comprehensive umbrella. One of its strengths is its specialty pharmacy, which is one of the largest in the U.S., says CJS Securities analyst Larry Solo, who initiated coverage of BrightSpring on December 14 and is a beneficiary in a 4.1% IS held by Manage a BrightSpring stock offering in June. The pharmacy arm has a strong share of limited distribution drugs, LDDs. These are higher-cost medications that often require professional administration and patient monitoring. They're not sold in drugstores. BrightSpring is on track for multi-year growth, the analyst said in a note to clients, citing a rise in LDDs and pending conversions to higher-margin generics on some of. BrightSpring has focused on clinical and pharmacy services following a 2019 merger with Kohlberg Kravis Roberts & Co.'s specialty pharmacy. Boomers fade to gray. As seniors often don't retire age past 65 years, demand for in-home care and other non-hospital services is driving BrightSpring's growth. U.S. population. BrightSpring Q3 2025 results. Pharmacy Solutions revenue. 4,230 millions. Growth 41%. Hospital and specialty revenue. 2,218, 42.1. Home and community revenue. 0.59, 0.4. Pharmacy segment. EBITDA. 0,14. 42,7. Hospital segment revenue. 0,1. 4,4. Home healthcare revenue. 0,11. Retail care revenue. 0,08. 8,8. Personal care revenue. 0,1. 5,3. Provider segment. EBITDA. 0,18. Source. U.S. Census Bureau. Company reports. Those. Expansion to faster-growing markets and share gains across various segments are other factors driving growth. KeyBank Capital Markets analyst Matthew Gilmore noted that while older LDD drugs convert to generic, BrightSpring is able to gain market share of the higher-margin generic drug by leveraging its unique sales force. Drug makers often limit the number of pharmacies for branded specialty drugs because of the additional care required. BrightSpring had 144 LDDs within its portfolio as of the third quarter, and the company's Onco360 is the leading specialty pharmacy for oncology, Gilmore added. Because BrightSpring gets much of its business from Medicare and Medicaid, government funding is critical for the company's success. Regulations on medicines. One headwind on that front is the Inflation Reduction Act of 2022 IRA, which imposed sharp price cuts on certain drugs for chronic illnesses, like cancer, diabetes, and chronic kidney disease. With pharmacy margins already thin, the new prices essentially eliminated the profit margin on the targeted drugs, Rousseau told IBD. BrightSpring's large scale in the pharmacy business cushioned the blow. But the policy overall is something the CEO said created unintended consequences for an otherwise well-intended legislation. It was a miss, he added. We are trying to make sure that policymakers are aware of the vital role that pharmacies play in keeping people out of hospitals and emergency rooms, Rousseau said. Regardless of the outside regulatory environment, we have continued to drive more and more patient volume, where we've continued to gain and win market share. And that's all been driven by our quality and the value of our services. Initial public offering. In January 2025, BrightSpring agreed to sell its community living business to Sevita, another provider of specialty healthcare, for $835 million in cash. The deal is expected to close in early 2026. Community Living, which operates the ResCare Centers for Intellectual and Developmental Disabilities and Behavior, a continuous care part of the original BrightSpring business. While valuable to those patients and their families, it's a type of care that's less clinical and away from the direction BrightSpring has evolved into, Rousseau said. BrightSpring went public nearly 2 years ago at $13 a share. At the time, investment firm Kohlberg Kravis Roberts & Co. and Walgreens Boots Alliance owned a majority stake in the company. KKR first acquired BrightSpring in 2019 and merged it with a KKR-owned independent specialty, BrightSpring Health Services. BrightSpringHealth.com. Ticker BTSG. Share price. NER 38. 2-month sales. $9.412. 7,000. EPS growth rate. 429.6. IBD Smart Select Corporate Ratings *. Composite rating. 98. Earnings per share. 98. Relative price strength. 96. Relative return rank. 112. Rank within industry group. 1. Sales + profit margins + ROE. C. Accumulation, distribution. A. See investors.com for more details. *. As of the 7th of January, 2026. Pharmacy. The deal helped transform BrightSpring into the specialty pharmacy leader it is today. Overnight, we had dramatically more pharmacy, scale and capability, Rousseau recalled. Really, over time, our primary focus has been on more clinical services and pharmacy services for seniors and for highly specialized populations, really not as much behavioral growth via acquisitions. In September 2024, Walgreens sold its BrightSpring shares to KKR. Today, KKR still owns a 55% stake in the company, according to FactSet. Other major institutional investors include Fidelity Funds, with about 12.5% of shares, and T. Rowe Price, with less than 6%. BrightSpring has used multiple acquisitions to grow across the country, where it now operates in all 50 states. In May, BrightSpring agreed to acquire some home health care and hospice locations from Amedisys, AMD, as part of requirements for the acquisition of Amedisys by United Health Group, UNH. BrightSpring hasn't disclosed terms, citing confidentiality agreements. At any rate, Rousseau said the deal won't increase the company greatly. In an October 28 conference call with analysts, Rousseau said there were no announcements and the company will remain focused on accretive acquisitions in targeted areas. We remain open and flexible to something interesting, a little bit larger, but certainly nothing transformational that's on our radar screen whatsoever right now. We really like our current strategy and direction to grow organically and where the balance sheet is. A highly rated stock. BrightSpring has an IBD composite rating of 98, the highest in the outpatient and home care industry group. Its most recent quarterly revenue growth also led the industry. The company's growth resembles BrightSpring's earnings per share ballooned 58%, 120%, and 173% the first 3 quarters of 2025, according to FactSet. Adjusted EBITDA grew 12%, and 37.2%. Revenue increased 25% in the first quarter of 2025 to $2.6 billion, second quarter, and 28.2% to $3.334 billion in Q3, according to company statements that exclude the community living business. A look at future earnings. In the Q3 earnings report, Brightspring again raised its full-year revenue guidance to $12.5 billion, $12.8 billion, or 24.1% to 27.1% year-over-year growth. It forecast pharmacy segment revenue of $11.05 billion to $11.3 billion, up 26.2%, negative 29.1%, and provider segment revenue of $1.45 billion to $1.5 billion, up 10% to 13.8%. The company also reiterated adjusted EBITDA of $605 million to $615 million, which works out to an increase of 31.5% to 35.7%. Analysts polled by FactSet expect, on average, fourth quarter earnings to climb 56.7% to 34 cents a share. Revenue is projected to increase 10.8% to $3.382 billion. Of 17 analysts who cover Brightspring, 16 have buy or outperform ratings, per FactSet. The other analyst has a hold rating. Shares of Brightspring climbed about 12.6% in 2025, much of it from June to mid-December, up with Handlebase. The stock is up more than 50% from the 24.9 buy point and is extended from that buy area. The stock climbed to a record high in December and appears to be forming a 3-week tight pattern with a 38.42 buy point. The relative strength line, which compares its stock's performance against the S&P 500, is near new highs as well. That's a bullish sign. Will fast growth continue? With company growth above industry trends and its own 3-year sales growth rate of 18%? How long can the fast pace continue? Rousseau said the company foresees midterms growth over the long term of 15% to 20% and mid-EBITDA. Those are solid results in an industry where anything over 5% or so deserves a pat on the back. He says management always aspires for double-digit growth, although as the company keeps growing, the law of large numbers will make it harder to achieve even increasing gains. I think it's too soon to sustain a growth rate for a lot of reasons, Rousseau said. We're in attractive markets that have a lot of need. We provide incredibly valuable services into those markets. He sees Brightspring's balance sheet at an attractive place, along with our cash flow generation. The company is able to integrate acquisitions and help sustain growth. A lot of would have to make sure there's always the support in place from a regulatory reimbursement perspective for these services that reduce costs for the system. 8. Internet and technology. From page 7. Tech leaders. Western Digital. Seagate hope to stay hot in 2026. By Ryan Deffinbohr, Investors Business Daily. The list of top-performing stocks in 2025 had a clear theme. It's a good time to be making hard disk drives. Western Digital WDC was an S&P 500 leader with a 282% rally last year, while its rival in the hard drive market, Seagate Technology, STX, wasn't too far behind with a 219% rally. The hard disk drive makers are benefiting from the massive build-out of data centers by cloud hyperscalers to train and operate AI models. Data is the fuel that powers AI, and it is HDDs, hard disk drives, that provide the most reliable, scalable, and cost-effective data storage solutions. Western Digital Chief Executive Ching Tang said on a call with analysts, following a late October earnings report. Can the rally continue into 2026? Both stocks are starting the year well. Western Digital stock gained 9% to close at $187.70 on Friday. Seagate rose 4.4% to close at $287.54. In a 2026 preview note, Morgan Stanley analyst Eric Woodring said the market has grown incrementally more cautious about the hard disk drive market. There are concerns, he wrote, about customers over-ordering during the current sales period. Hardware tends to be a cyclical market, so investors are questioning when the boom for demand could shift. However, Woodring reiterated an overweight, or buy, call for both Western Digital stock and Seagate in the December 17 client note. He said, a supply-demand imbalance is giving a clear view of sustained growth for hard disk drives. We believe that HDDs have the potential to be the greatest outperformance for our IT hardware space in 2026 again, as cloud strength and the emergence of AI as a new catalyst for data storage, putting upward pressure on capacity growth, pricing and gross margins, wrote Woodring. Shares of both Western Digital and Seagate slumped in 2022 after a surge in hardware demand that started 2 years earlier faded. That left a glut on the market that sank sales and earnings for the hard disk drive manufacturers. Both Seagate and Western Digital have removed a lot of the excess capacity and inventory within the supply chain following the downturn. Evercore ISI analyst Amit Daryanani wrote in a client note. As a result, the two companies are operating in a very tight supply and demand environment. Going forward, both companies plan to fulfill exabyte demand growth purely through areal density improvement rather than adding incremental capacity from a unit standpoint, which enables more steady capital expenditure spend from both companies. Seagate chief executive Dave Mosley was asked by analysts in October whether the company plans to boost hard drive production in response to the growing demand. He said the company is focused on meeting customer demand through boosting the density of its hard drives. The company is increasingly rolling out hard disk drives that rely on a technology called heat-assisted magnetic recording, or HAM, to store significantly more data. Our strategy for adding capacity, if you will, is to go through product transitions, Mosley said. We're not really adding unit capacity. Western Digital is also rolling out drives with HAMR technology. Morgan Stanley's Woodring said the efficiency gains both companies will receive from the technology are still not fully appreciated by investors, creating further upside. 9. Industry snapshot. From page 8, as battery storage a bright spot for Tesla's business. Electric vehicles. Battery storage a bright spot for Tesla's business. Tesla, from a 1. True self-driving rolling out rapidly in 2026. In recent weeks, videos on Elon Musk's social site X appear to show Model Y vehicles driving around Austin without a safety monitor inside. Musk on December 14 confirmed that testing is underway with no occupant in the car. He noted that the vehicles in the videos were truly unsupervised, or if support cars have safety monitors nearby. Tesla has said its Cybercab should begin production in April. With no steering wheel or pedals, the two-passenger Cybercab will require self-driving to hit the road. We expect an accelerated robotaxi launch across the U.S., with important volume production of Cybercabs starting in the April-May timeframe. In a nutshell, we believe Tesla is taking major steps in advancing its AI revolution path, with autonomous and robotics front and center heading into 2026. That will be a game-changer and define Tesla's future, Ives wrote. Ives expects Tesla ride-hailing to roll out in major cities in Q3 2026. In 2026, he has a $600 price target on Tesla stock, which now trades near $450. We believe Tesla could reach a $2 trillion market cap over the coming year, and in a bull case scenario $3 trillion by the end of 2026, Ives said, as full-scale volume production begins of the autonomous and robotics revolution. Tesla has a current market capitalization of around $1.5 trillion. A million robo-taxis. Morgan Stanley analyst Andrew Percoco predicted in a December 15 note that Tesla will meaningfully increase its robotaxi fleet size in 2026 to 1,000 vehicles, up from an estimated 30 to 150 on the road now. By the end of 2026, we expect Tesla to have 1 million robotaxis on the road across multiple cities, Percoco wrote. Once unsupervised robotaxis roll out in geofenced areas of Austin and other markets, the expectation is that Tesla would quickly shift full self-driving to unsupervised as well. Even more recently, doubled down on his year-end 2025 forecast for an unsupervised Tesla robotaxi service in Austin. Even the most fervent fan knows that Musk's timelines for Tesla self-driving have been, at minimum, wildly optimistic. The Tesla CEO has predicted true autonomy this year, or next year, for nearly a decade. Those deadlines generally have come and gone with little discontent, with investors quickly shifting to the next year target. However, Musk's latest promises have been so near-term that they raised expectations that this time they would come true, if not by December 31, then very soon after. That raises the stakes for a Tesla stock that has been largely structurally unsupervised vehicles well into 2026. Alphabet, Google, owned Waymo and Amazon. AMZN-owned Zoox are ramping up activity, with Waymo set to significantly expand the number of cities it operates in. Several Chinese firms, including Baidu,